Mindsetters, welcome to it. It is a Thursday afternoon and you're hanging out with Looney and our lovely teacher. Ma'am, I've never been with you. Tell me who you are, what you do, and all of that stuff.
Okay, that's fine, Looney. I'm Mahesh. I think the Mindsetters know me, but it's great to work with you today.
It's great to meet you.
Fantastic.
Thank you so much for coming in. We are doing accounting mindsetters, so I hope you guys are ready. You're set to go, and I'll hand it straight over to my lovely teacher.
Okay. Hi guys, welcome. In today's lesson, we're focusing on the cash flow statement as well as some of the notes to the cash flow statement itself. Remember guys, we're busy with revision. I've taught the cash flow statement before, and today we're going to be looking at a question from the November 2009 paper. So let's get started. Right, in this question guys, the information given below was extracted from the financial statements of Manchester. Let's get a pen out quickly. Okay. Right, let's carry on reading. Of Manchester Limited required. We're going to be preparing the following. Firstly, complete the note for reconciliation between profit before tax and cash generated from operations. And thereafter, guys, we're going to be looking at preparing the cash flow statement for the year ended 28th Feb 2009. Okay. Right, let's go through our information and then we'll get started with the question itself. So very quickly, guys, the information that is given to me, I've got my extract from my income statement, and then further down, further down I've got an extract from the balance sheet itself. Okay, right, Looney, I just got a bit of a problem with the board itself, so if you want to just chat to the Mindsetters while I
Mindsetters, don't forget to hit us up on Facebook. Our page is facebook.com/learnextra. Remember to hit me up on Twitter as well. Our handle is @learnextra. Remember to download all your show notes, the videos, the schedules, everything you want to know. We have a sale going on right now for all our products here at Mindset. 15% off our all the products that we're offering, the DVDs, the books, and all of that stuff. So make sure you go check that out on mindset.co.za/learn, and then you can just talk to me, guys, please, because it's been very quiet. Let me just tell you about this quick sale. It's the exam revision crazy sale, up to 15% off. So please go on to mindset.co.za/shop, yes, to check out all of that information, because we do have an exciting thing going on there. Remember to tell all your teachers, anyone you know, guys. Mindset needs you for CAPS aligned programming, previewing, reviewing, content development, and video presentation. So if you guys could please check that out. I will post all the information on our Facebook page. Are you fine now?
Yeah.
Okay, I'll hand back over to my teacher.
Right, guys, very quickly, I want to look at the information before we look at completing the note as well as the cash flow statement. So I'm given an extract from the income statement. Okay, so I've got my depreciation, interest expense, net profit before tax, and then my income tax is not given to me. It's missing. In brackets, I'm told that rate, or the taxation rate, is 30% of net profit. Okay, so what I'm going to do is, let's get our calculator out and let's work out the income tax for the financial year. Okay, I know you guys know how to do this. I'm simply taking my net profit before tax, which is 844,300, okay, times by 30%, and my tax for this financial year is 253,290. So let's just write that down, 253,290. I just want to fill that in quickly. Let's just double check, 253,290. Okay, right, further down, the rest of the info that we have they're giving us a balance sheet. So we've got our balance sheet for the following financial year ends, 28th Feb 2009, and then I've got 28th Feb 2008. Now guys, as accounting students, you already know 2008 would be my previous financial year. And because it's my previous financial year, I'm going to be able to pick up opening balances from this part of the balance sheet itself, from 2008. 2009 would be the current financial year. And again, because it's the current financial year, I'm able to pick up my closing balances from this part of the balance sheet. Okay, right, if we scroll further down, okay, I just want to quickly look at certain points in this balance sheet. I notice SARS income tax. Okay, SARS income tax is falling under current assets, which means SARS for the year 2009, SARS has a debit balance. It's an asset, so naturally it has a debit balance. Okay, further down, just go further down to equity and liability section, something that I want to bring to your attention, guys. Ordinary share capital has a par value of 5 Rand, so that is obviously important. And then looking at my current liabilities, okay, let's just bring that down a bit. Okay, your current liabilities, I've got SARS income tax for the 2008 financial year. Okay, SARS is a liability, meaning SARS has a credit balance. Okay, just a bit of information that I'm going to use later on. Right, let's now go to the next slide, or let's go to the next bit of information. I've got information A that tells me additional new shares were issued at a premium halfway through the year on the 31st of August 2008. These shares did not qualify for an interim dividend. Okay, so that's information A. Right, the next bit of information given to me, fixed assets were sold for 100,000 Rand cash at carrying value. So I just want to highlight that quickly. And then finally, the last bit of information, okay, let's just scroll down to information C. Last bit of information, I've been given earnings and dividends per share were as follows. Again, 2009, which is the current financial year, and I've got 2008, which is the previous financial year. Okay, we've gone through the information. Absolutely important, guys, that you take at least a minute and a half to go through the information, and thereafter you start answering the question itself. Okay, so we're now ready. Let's go. Let's get started. The very first question wants me to complete. Let's go. Okay, wants me to complete the note for reconciliation between profit before tax and cash generated from operations. Now immediately, guys, I notice on my answer sheet a bit of information has already been filled in, and I need to complete the balance. So I've been given net profit before tax, so that is filled in for me. Adjustment for depreciation, which I need to add. Interest on borrowed funds, or my interest expense, which also gets added on to get my operating profit before changes in working capital. So that has been done for me. Let's look at what has not been done. Changes in working capital, that's what I need to complete. So let's get started. Now remember, guys, working capital, when we talk about working capital, we're looking at changes to inventory. Okay, we're also looking at changes with regards to debtors, and thereafter any change with regards to creditors. Okay, right, let's start with inventory first. Immediately, guys, you notice that all three items are balance sheet items, so in my information, that's where I'm going. I'm going to the balance sheet itself. So let's go to our info and let's go to our balance sheet. Okay, right, there we go. There's our balance sheet, and we're starting off with inventory first. Okay, so under my current assets, there's my inventory. I've been given 2008, my inventory is sitting at 110,250. 2009 inventory is now 251,250. So immediately there's obviously been an increase in inventory. The business has purchased more inventory for this financial year. So let's look at how much more inventory we have on hand at the end of the year. So if I take my 251,250, okay, let's just clear that up. 251,250 minus 11, okay, another 110, 250, okay. So we've got an additional amount of inventory, an additional amount of cash that was spent on inventory of 141,000. So let's now fill that in. Let's go to our answer sheet. Okay, so inventory, I've got additional inventory that was purchased. Let's just bring that back quickly, 141,000. Okay, now immediately, guys, remember cash flow, you're looking at inflows and outflows of cash. So the fact that there has been an increase in inventory means that more money was spent on inventory, hence it's an outflow of cash for the business. Okay, let's now look at debtors. So back to our information, and again back to our balance sheet under current assets. Okay, the next item we have is our trade debtors. And again, we are inspecting what happened to trade debtors when comparing the current year to the previous year, or when comparing rather the previous year to the current year. Okay, in the previous year, 2008, your trade debtors were sitting at 76,000, 2009, 60,000. So immediately, we notice there's been a decrease in debtors, a decrease of 16,000. 76,000 minus 60,000, there's been a decrease of 16,000. Okay, so let's now put that information through in our answer sheet. Okay, so my debtors, 16,000. Okay, there's been a decrease in debtors, and immediately, guys, a decrease in debtors means that your debtors are paying you much more sooner. So money is going into the business's bank account, and therefore this 16,000 is an inflow of cash, money going into the business's bank account. Okay, right, let's now look at creditors, and again we're comparing, or we're going back to our balance sheet. And this time, remember guys, creditors will be towards the bottom of the balance sheet because it is a liability. So if I go to my current liability, the first item, I've got my trade creditors. Okay, 2008, my trade creditors were sitting at 220,475. 2009, okay, there's obviously been a decrease because this amount is now 209,945. So immediately a decrease in creditors. Let's work out what the decrease is. Okay, so I've got 220,475 minus 209,945. Okay, let's just check that if it's correct. Yes, it is. So there's been a decrease of 10,530. So let's fill that in. Okay, let's go to that answer sheet. Decrease of 10,000. Just going to go back there, guys. 10,530. Right, now what does this mean? A decrease in creditors means that the business is obviously paying their creditors much more sooner. Now, the fact that the business is paying their creditors immediately tells us that this is an outflow of cash. Money is leaving your bank account. Okay, right, we're now able to calculate our change in working capital. So let's do that quickly. Okay, so we've got 140, let's fix that, 41,000. Okay, and then I've got, I'm just going to say plus, I'm going to add my two negatives, 10,530. Okay, and I'm going to subtract the 16,000. Okay, guys, to get a change in working capital of 135,530. So let's write that down, 135,530. Okay, and I'm going to put that in brackets. Okay, right, the last bit for this note, we can now calculate our cash generated from operations. Okay, so immediately I've got my operating profit before changes to working capital. I've got now my changes to working capital, which clearly shows me there's been an outflow of cash. So if I subtract these two amounts, okay, let's do that quickly. Okay, so 104, 250 minus my 135,530 is giving me cash generated from operations 906,720. So let's write that down, 906,720. Okay, right, guys. I think Looney, let's take a break.
Okay.
And then when you guys get back, we will start with the cash flow statement.
All right. Mindset says we are going to take a very short break. We are doing cash flow statements after the break, so don't go anywhere. Welcome back, grade 12s. I hope you guys are refreshed. You guys got some water and some juice, and you're ready to be on the roll with me, Hesh. So we have a question here. Elias is asking, when are you going to start with the manufacturing chapter?
Okay, Elias, at the moment we're focusing on the cash flow statement, and I think next week we're going to be looking at ratio analysis. So I promise you we're going to get to manufacturing accounts.
All right, okay. Elias, please just hold on tight to your excitement. We are going to do manufacturing very soon, okay? So I hope you got that answer. Straight back to you.
Right, guys, just before the break, we completed the note, cash generated from operations, and now let's look at the second part of the question. We're now going to focus on preparing the cash flow statement for the year ended 28 Feb 2009, and then something that you've seen before, workings must be shown in brackets to earn part marks. So obviously there's no other note for us to complete. Everything, all our calculations needs to be shown in brackets. So let's get started. Right, the first part of the cash flow statement, guys, you all are familiar with this. Remember, this is revision and time for you to recap on the actual cash flow statement. Cash flow from operating activities. So that's the first part of the cash flow statement. Let's try and complete this together. Cash generated from operations, this was the note that I completed earlier on, and all I've done, guys, is I've recorded the amount in the cash flow statement. So at the end of the note, our cash flow from, or our cash generated rather, from operations was 906,720. Okay, let's now look at the next part to this section of the cash flow statement. I'm now going to record my interest paid, and remember, guys, interest paid is an outflow of cash, therefore it needs to be shown in brackets. So let's go to our information, and this time we're looking at the income statement. Okay, so we've got our interest expense given to us at 164,450, so we're simply taking that through. Okay, 164,450, 164,450. Okay, very simple, no calculations required. Right, the next item, dividends paid, and here, guys, I'm going to have to do some kind of calculation. Remember, when it comes to dividends paid, in order for me to calculate the amount of dividends that have been paid to my shareholders, I'm looking at the amount owed at the beginning of the year. So I'm just going to write that down as an opening balance, amount owed to my shareholders at the beginning of the year. I am then going to add my ordinary share dividends for the financial year, And finally, I'm going to subtract the amount owed to my shareholders at the end of the year. In other words, what's that closing balance you owing to your shareholders? And that would give me my dividends paid for this financial year. Okay, so let's look at that calculation. For that, I'm going to my information, I'm going to my income statement, guys. And what I'm going to do is I'm going to try and use the bottom of the page to do the actual calculation itself. Okay, right, so just one more time. Amount owed to shareholders at the beginning of the year. So if we go to our current liabilities, shareholders for dividends, and remember, beginning of the year is 2008. Okay, so at the beginning of the year, let's just remove this for now. Okay, then we can see the figure. Okay. Right, at the beginning of the financial year, shareholders for dividends, the company was owing the shareholders 52,525. So let's fill that in. Beginning of the year, 52,525. Guys, I'm not doing a note, I'm simply doing a calculation. Okay, right, I've got my opening balance. To that opening balance, I'm now going to add my ordinary share dividends for the financial year. Now, looking at the information that's given to me, I've got a balance sheet, I've got an extract of the income statement, and there's obviously no ordinary share dividends that has been given to me. Okay, right, so immediately, guys, ordinary share dividends not in my income statement will obviously not be in my balance sheet. So let's now go to our additional information. Okay, we're looking at additional information C, but I've got A here as well because we're going to need a bit of information A when doing this calculation. So remember, guys, I'm trying to calculate my ordinary share dividends, the amount that is not given to me. Right, I am told additional new shares were issued at a premium halfway through the year on the 31st of August 2008. These shares did not qualify for an interim dividend. Information C. Okay, if I go down to information C, I'm looking at the current financial year and I'm interested in total dividends. Total dividends is made up of interim dividends as well as my final dividends. Now, immediately, guys, interim dividends were declared during the financial year, but unfortunately for the new shareholders that purchased shares during the year, they did not qualify for the dividend itself. So how do we calculate what is that actual interim dividend that was declared and paid to the shareholders? We're going to need our number of shares issued, number of shares, okay, that were issued, and remember, this will be at the beginning of the year. We're going to multiply this by the dividend or the interim dividend per share, which was 40 cents. Okay, so let's do that. All right, let's start off with our interim dividend, number of shares that were issued at the beginning of the year, and for that we need to go back to our information and we need to look at our balance sheet. So let's go to the information quickly. Okay, and let's go to the balance sheet. All right, there we go. There's our balance sheet. And I'm going to my ordinary share capital. My ordinary share capital at the beginning of the financial year. Okay. Right, sitting at 1,050,500 to get the number of shares that were issued. I know you guys know this calculation and we're probably doing this together. I'm taking my ordinary share capital, 1,050,500. I need to first divide this by par value, which is 5 Rand, to get the number of shares that were issued at the beginning of the financial year before the new shares were issued, 210,100. So let's take that through to 10,100. Okay, back to our calculation itself. Okay, there we go. Okay, so the number of shares issued let's just get the calculator out one more time. It was 210,100. Okay, extend the page there a bit. Times this by 40 cents and the interim dividend that was declared, guys. Let's get the calculator out. Times 40 cents to give me 84,040. Okay, now why do I need to do this calculation? Because remember, I'm trying to calculate ordinary share dividends. But what is ordinary shares dividends made up of? Correct, it's made up of interim and final. Okay, so I've calculated the interim dividend already, and all I need to do now is calculate the final dividend. So let's do that. The final dividend, again, I still need number of shares issued. Okay, so number of shares issued. But remember, this would now be at the end of the financial year times each shareholder final dividend they received 32 cents per share. So times this by 32 cents. Okay, so let's go back to our balance sheet and let's look at the end of the financial year, the end of the 2009 financial year. So back to my ordinary share capital. So at the end of the financial year, my ordinary share capital sitting at 2,085,000, guys. So let's get our calculator out. Okay, 2,085,000. Okay, divide this by 5 Rand to give me number of shares issued at the end of the financial year, 417,000. Okay. Okay, so it was 417,000. 417,000 multiplied by 32 cents, and that gives me a final dividend that was declared times 32 cents, a final dividend of 133,440. So 133,440. Okay, let's just quickly check that is correct. Yes, it is. Right, going back to, guys, remember, the whole purpose of this calculation is for me to work out what is my ordinary share dividends. So it's simply the sum of interim dividend, which I've got as 84,040, and to that I'm going to add my final dividend of 133,440. So let's do that. Let's get our calculator out. So I've got the final dividend already, plus 84,040 to give me my ordinary share dividends for the financial year, 217,480. So let's now go back to our answer sheet. Okay, so back to our answer sheet, dividends paid, and I'm just going a bit further down. Okay, let's just quickly find that. My dividends paid, I think it was busy with the information. Okay. Right, it was further down on this slide. Okay. Luli, that's what happens when you have to move from slide to slide. Okay. Right, but I'm sure our mindsetters know exactly what I'm doing.
Can I ask you a question while you're doing that?
Is it on this particular section itself? On this calculation?
No, it's not in a calculation. I think it's just a general question.
Okay, can I come back to you? Let me just finish this calculation.
Are you fine now? Okay, cool.
Okay, right, so my ordinary share dividends, guys, was an amount of 217. Let's get that back, 217,480. Okay, right, opening balance, I've got my ordinary share dividends. All I need now is my closing balance. So at the end of the financial year, how much are we owing our shareholders? Shareholders for dividends, and let's just put that up a bit. Okay, so shareholders for dividends at the end of the financial year, guys, 133,480. So at the end of the year, 133,440, not 80. Okay, so I'm just going to put that into brackets. Right, I've got my figures, which means I can now calculate what my dividends paid for this financial year is. Okay, so let's get our calculator out. Right, so all I'm doing is, let me just add on my 52525 minus 133,440, and I've paid my shareholders, the dividends paid for this financial year is 136, let's just quickly get that back, 136,565. 565. Okay, and this is the figure that I'm now going to take to my cash flow statement. Okay, so let's do that. Let's go to the cash flow statement. Okay, so dividends paid. Remember, guys, you showing these amounts in brackets. I wanted to show you the calculation and therefore took a bit more space. But my dividends paid for this financial year is this amount of 136,565. 136,565. Okay, quite a bit of calculation for that mark, but again, guys, if I'm showing it in brackets, I'm obviously getting marks along the way. Okay, Luni, you want to ask me your question before I start with tax?
Okay, it's from Siyabonga Buthelezi Kanyisani, and he's asking, as we have increase in inventory, does that mean the business purchased more stock to come into the business, and then the money goes out to purchase that stock, and the stock that comes into a business is increased?
Okay, he's absolutely correct.
Okay,
Siyabonga, you're absolutely correct in terms of your thinking. The business has purchased more stock, hence it's seen as an outflow of cash. Remember, what are we working on today? We're working on the cash flow statement. Money coming into your bank account, money leaving your bank account. So the moment you're buying more stock, it simply means money is leaving your bank account. An increase in inventory is an outflow of cash. Okay.
All right. I think it's time to take a little break.
Should we take another break? Okay.
Mindsetters, don't go anywhere. We will be back straight after this. Welcome back, Mindsetters. I hope you guys are still on the roll and you're on the ball with Mahesh and you're doing this accounting and you're getting it. Just to tell you guys again, Mindset needs you guys. We're running a recruitment program for grade 10 to 12 caps. If you know anyone, any of your teachers, any of your parents who know anything about content development for grade 10 to 12 caps, review and video production, please guys, ask them. Beg them, because we want your parents and your teachers to be part of Team Mindset. To apply on mindset.co.za/learn/jobs. Okay, so make sure that you ask your teachers, and the application forms do close on the 26th of August. So this is like now. So please just ask them, grade 10 to 12 caps, and then they must apply. But with all that said, Mahesh, oh no, wait. Shout out to Dia. Hi, Dia. Mahesh's daughter is in the house, guys, like around, not in the studio, but she's around here somewhere. So shout out to you, Dia. Hi. Okay, Mahesh, back to you.
Thanks, Ludi. Right, guys, let's try and do as much as we can in the next 10 to 15 minutes that we have. Right, my taxation paid again. Something that you are aware of, taxation paid is an outflow of cash. And again, guys, taxation paid, I'm going to be looking at opening balance, okay, how much was owing to SARS at the beginning of the financial year. I'm also going to be looking at the income tax for the financial year, and then the closing balance as well. Okay, now I'm obviously not putting this as some kind of formula or equation, because we know with SARS income tax that sometimes the opening balance and the closing balance could either be a liability or it could be an asset. So the best way to do this calculation is by using a T account. Right, let's go to our information and let's do just that. The T account that I'm talking about is everyone's favorite account. I know my accounting students use this all the time, SARS income tax. Right, now if I go to my balance sheet and I'm looking at the beginning of the year, the opening balance, immediately I notice, remember, 2008 is my opening balance, Just want to get this out quickly. Okay. Right, for the year 2008, in other words, at the end of the previous year, SARS had a credit balance of 7,750. In other words, for the year itself, the opening balance for the current financial year, we are owing the receiver 7,750, which means SARS is a liability. Right. For the financial year, what is our income tax for the financial year itself? So if we go further up, we've done this calculation already right at the beginning. My income tax that I should be paying the receiver for the 2009 current financial year is an amount of 252,390, 253,290. How did I get this amount? One more time. I took my net profit before tax times 30% to get my income tax for the financial year. So 253,290. Let's take that to our T account. Okay, 252. Oh, I'm going to have to quickly go back and just double check. 253,290. Okay, 253,290. 3,290. Right, so I've got my opening balance, I've got my income tax for the year. Now I need to look at my closing balance. In other words, at the end of the financial year, how much am I owing the receiver, or is it the other way around? Is the receiver owing me? When I say me, guys, I have the habit of saying me, I'm referring to the business. So at the end of the financial year, okay, if we look at our current liability, SARS income tax, okay, so we are obviously not owing the receiver. So if we go further up to our current assets, okay, so under current assets, SARS income tax, there's a debit balance of 7,500. Okay, so remember, guys, a debit balance, it means simply that the receiver is owing the business 7,500. Okay, now this is where a lot of students make a mistake, and let's quickly erase that. Okay, right, a debit balance simply means, obviously, on the debit side of this account, my balance, okay, is 7,500. Right, which means if my brought down is on the debit side, my carried down would then be on the credit side of this account. Remember, as a calculation, I'm reconstructing the SARS income tax account. So on the credit side, 7,500. Right, again, the purpose of this account is I'm trying to calculate how much has been paid to the receiver. Okay, so I've got my opening balance, I've got my income tax, and I've overpaid the receiver 7,500. So all I'm doing, guys, is I'm adding these three amounts to give me the amount that was actually paid to the receiver. So let's do that. Okay. Right, so we've got 7,750. I am adding my income tax, 253,290, sorry, not minus, let's just delete that, plus 7,500. So in total, the business has paid the receiver 268,540. Okay, so this amount here is 268,540. Just want to quickly double check. 268,540, and I'm going to take this now through to my cash flow statement. Okay, so we've paid the receiver an amount of 268,540. Right, guys, and again a reminder, I know I've been saying this often, but it is important that you show these amounts that I've shown in the T account in brackets in order to earn part marks in the event of you getting this calculation incorrect. Right, I've completed cash flow from operating activities. Guys, I'm not going to put the total in. That's something that you can do. Let's now look at the next part of the cash flow statement, my cash flow from investing activities. Right, when we talk about investing activities, guys, here we're talking about, did the business buy additional tangible assets during the financial year? Did the business sell any tangible assets during the financial year? So my purchase of fixed assets would be an outflow of cash, whereas proceeds from the sale of fixed assets would be a positive amount and would not be shown in brackets. Right, let's now go to our information. Okay, so if we go to our info, we're looking at, I think it is information B. Yeah, there we go. Right, so information B, I've been told the following. Fixed assets were sold for 100,000 Rand at carrying value. In other words, the value that the assets were worth at the time of sale, that was the value that the assets were sold. So I've got an inflow from the sale of 100,000 Rand. So let's take that through to our cash flow statement. Okay, so this is obviously proceeds from the sale of fixed assets, 100,000. Right, they haven't mentioned anything about purchasing fixed assets, but remember guys, this is something that we need to look at. We need to look at the information that is given to us and be able to establish whether the business did purchase fixed assets. Okay, so in order for us to do this, we're going back to our balance sheet. Let's quickly find that. Okay. Right, there's my balance sheet, and in my balance sheet, guys, I'm looking at non-current assets, tangible or fixed assets at carrying value. Again, I'm going to use a T account because I mean, we do accounting and we obviously work with T accounts. I'm going to construct a T account only to help me with my calculation. So I'm going to call this tangible assets. And this is at carrying value. Okay. Right. At the beginning of the financial year, my tangible assets had an opening balance of 2 million. So let's fill that in, 2,967,500. Okay, so this was obviously at the beginning of the year. At the end of the year, my tangible assets now have a carrying value of 3 million. So let's fill that in, end of the year. 3,440,885. Right, now if you look at tangible assets will increase whenever I purchase. If I've bought additional assets, tangible assets would obviously increase. What makes tangible assets decrease? Whenever I write off depreciation, and also when there is a sale of tangible assets. Now, I've already been told, I've already gone through the information where we already aware that there has been a sale of tangible assets of 100,000. So I'm going to fill that 100,000 in. Then my depreciation for the financial year is given to me at, okay, where's our depreciation? It's the first amount, 33,500. So I'm going to fill this in as well, 33,500. Right, guys, now watch very carefully how I'm going to calculate the amount of tangible assets or the value of tangible assets that were purchased. All I'm doing using this T account is I'm taking my closing balance. To that, I am adding my disposal of 100,000 as well as my depreciation of 33,500, and I then subtract my opening balance of 2,967,500 in order to calculate how much of tangible assets were purchased. So let's do that. Let's get our calculator out. Okay. Right, so we've got 3,440,885. To that we are adding 100,000. Okay, plus 33,000. Get rid of that 13,500. Okay, and we then subtracting. Okay, so minus 2,967,500 to give us tangible assets that were purchased 606,885. So let's fill that in. 600 and I'm going to have to just quickly go back. 606,885. And this is the figure that I now take through to my cash flow statement. Okay, so back to our answer sheet. Purchase of fixed assets, 606,000, I think it was 885. 885. Okay, and again, guys, I'm sure you know exactly what I'm going to say. Bracket work. Make sure that you are showing these amounts in brackets in order to earn part marks. Okay, now that's as far as your cash flow from investing activities are concerned, and obviously you can calculate the total itself. Okay, Luni, you were extremely quiet. Are there any questions?
Okay. There was a question here that was asking you to do the OSD calculation again, but are you far now from that?
The ordinary share dividend calculation.
Yes, that one.
Okay. What I'm going to do is I'm going to quickly try and complete proceeds from shares issued.
Okay.
And then we'll try and go back to the ordinary share dividends.
Okay.
Okay. Right. Proceeds from shares issued. Guys, I'm now on the last part of the cash flow statement. Cash flow from financing activities. The first part, proceeds of shares issued. The second part, repayment of long-term loan. Now, immediately, proceeds means you are receiving, the business is receiving money from issuing shares, and this is considered to be an inflow of cash, hence it's positive to the cash flow statement. Repayment of long-term loans, on the other hand, would be seen as an outflow of cash. You paying your long-term loan. So again, if we go to our information, we're going to start off firstly with shares. We already know that the business did issue additional shares during the financial year. Okay, so if I go to my ordinary share capital, okay, let's look at how much was received for selling the new shares. All I'm doing is I'm comparing 2008 to 2009. Okay, so I've got 2,085,000 minus 1,050,500. Okay, to give me the business received 1,034,500. But remember, according to information A, the shares were sold at a premium, and we notice immediately 2008 the share premium was 0, but 2009 for the current financial year the business received a premium on selling shares of 268,970. So if I add on a further 268,970, okay, the total proceeds from the sale of shares is an amount of 1,303,470. So let's fill that in. Okay, an amount of 1 million. Okay, 1 million, let's just put the 3 there, 3,470. Okay, guys, this is obviously 1,303,470. That was the proceeds of shares issued. Right, we don't have much time. It's just the very last part, repayment of long-term loan. And if I don't fill this in, I'm just going to quickly explain from the balance sheet itself. If I go to my non-current liability, okay, I do have a loan. It was 1,525,000. There's obviously been a decrease, a repayment. The loan is now 300,000. So the difference between what the balance was at the beginning compared to what the balance is at the end of the financial year would be my repayment of loan. Okay, Luni, do you think we should quickly explain ordinary share dividends?
If you can do it in like 2 seconds.
2 seconds. Okay. Guys, remember, ordinary share dividends, apart from using the information that was given to us, if we go to the very last slide, okay, so we've been given our dividends per share, and that's what we obviously looked at. In order for us to calculate our ordinary share dividends, as accounting students, we know interim plus final is going to give me my total ordinary share dividends. So very quickly, in order to calculate interim dividend, I took the number of shares issued at the beginning of the financial year times 40 cents, and I got my interim dividend. My final dividend, on the other hand, I still used number of shares issued, but this time at the end of the financial year times 32 cents, and I obviously added the two amounts to give me my ordinary share dividends. Another way of doing this calculation, guys, is if I could reconstruct appropriation. My appropriation account, remember, an account that you are absolutely familiar with. My net profit before tax would go onto the credit side. Then I would have my income, not income tax, my retained income at the beginning of the financial year. On the debit side, I would show my income tax, and then ordinary share dividends would be the amount that I'm looking for. So if I reconstruct my appropriation account, our accounting students often use this account, and I know they know exactly what I'm talking about. I'm able to get the same answer for ordinary share dividends.
Okay, thank you so much. But Lisa, I hope you got your answer. Mahesh just explained it very nicely for you. Mindset is thank you so much for tuning in. Until next time, we will see you then. Goodbye.